What's up, MWR Nation? It's yours truly, Don Wilson, Coach D, and I am here with my better half,
Ruth Rodriguez.
Hey guys, so we just wanted to share our MWR testimonial. So before Make Wealth Real Financial, Ruthie and I was just like every other American. As you guys can see, we went to school, got those degrees. But guess what came with those degrees? A bunch of student loan debt. But since joining Make Wealth Real Financial and working with our experts, we were able to turn in our 2 pay stubs as well as our previous tax returns. And with that, they were able to bring back $960 into our household every single month. So that's a $12,000 a year increase that we were able to bring into our house. Ruthie financed a brand new Lexus, and she financed it for 60 months. But with the $12,000 that we were able to cash flow back into the house, we was able to pay it off in 13 months. From there, my friends, we uploaded our credit reports. Well, uploading our credit reports, the experts were able to increase Ruthie's credit score from a 660 up to an 816, and then increase my credit score from a 787 up to an 834. During the pandemic, not everybody was losing. Because of our great credit scores, now we were able to refinance our mortgage and go from a 4.25 down to a 2.25, saving over $90,000 in interest. We were inducted to the Comma Club from a cash flow earning perspective through our amazing compensation plan. That means we got a comma in the check that we receive every single month. From there, my friends, we were able to participate in the private reserve account. And last but certainly not least, able to schedule that consultation where we both are now land banking owners holding our deeds here. Thank you so very much to the Make Wealth Real Financial team, to the staff, to our amazing leadership, and to you, MWR Financial.
Welcome. I'm Ajaie Albert, founder of Exclusive Financial Class. My particular coach and mentor, Don Wilson, on the call.
Hey, what's up, everybody? How you guys doing this evening?
All right, man. And I invited a special guest tonight, man. This guy has helped me and plenty of my friends do exponential things with wealth investments, man. And we don't want anybody to miss this education or opportunities to invest in yourself, one, because that's your most important investment. Two, this is just not information that is widely presented to people of our class financial situations. Usually these investments are reserved for people who have a $250,000 net worth or above. So we're providing you an opportunity to hear these investments and get into these investments. Now, Eric is my financial advisor personally, man. So he's helped me set up different investments for me and my kids. He's been with Cal Choice for years. He's a father, recently newborn father, but you know what I'm saying? So he's just like us, man, but he is the expert in investments, man. I'm no expert, so I don't have the wealth knowledge that he has, which is why I pay Eric to be my advisor, man. So I hope y'all take heed and listen to these investments, man. And we'll go over how you get into these investments after we let him give his presentation, man. So I hope y'all enjoy. And I'm looking forward to speaking with y'all and having questions at the end.
Awesome. Hey, so I guess you just want me to jump in right here now, AJ?
Yep, right now. We waiting on you.
Awesome. Hey, guys, I appreciate getting a chance to come here and be with all you. I see some names I recognize. Good to see you guys all again. And there's a lot of new faces here as well. So I'm excited by that. And just want to share with you guys a little bit about us. We're going to keep things kind of light today. We're going to dive into just a couple of things that you guys will hear a little bit about that's kind of unique to what we do and what we bring to MWR. We are a full-service financial planning entity. So we do with the IRAs, the 401ks, all the other areas of financial planning, including tax planning and showing you guys how to be able to retire and possibly retire tax-free depending upon your situation. We put a lot of planning into that place. And we deal with all the regular tools that you're familiar with, 401ks, stocks, bonds, mutual funds, all that other stuff. But what we want to share with you today are some things that you've never heard before, because anybody can share with you the stuff that you've always heard. We want to share with you the stuff your advisor isn't talking to you about. So I'm going to go ahead and see if I can share my screen here real quick. Did you guys lose me? Can you all still hear me?
Yeah. No, you're frozen, but we can hear you.
Okay, for some reason it says my internet's connecting again. I'm reconnecting to the Zoom. So if we're going to have an issue, I might kill my, oh, hang on. It just said my internet died. I might have to change my connection here. And if I do, what I might do is kill my video to make sure that my internet bandwidth is here. I paid extra for fast internet, got new internet routers, and yet everything is not cooperating today. Give me a moment to figure out what the heck's happening here. Disconnect and reconnect. Let's see if that makes me have internet again. Of course, right as soon as you guys go hand it off to me, everything goes wrong.
Hey, man, that happens.
That happens. It happens.
The way technology operates. Maybe I can get, oh, here we go. I'm back. Can you guys hear me, see me?
Yep,
yeah.
We hear you and see you.
Perfect. I'm going to kill my video in the respect of saving a little bit of this bandwidth so you guys can see my screen, because that's what I really want you guys to see is some content today. Oh, you got to let me do it here, Mr. AJ. Under share screen, allow me to share mine. You are muted, sir.
All right, let me, I'm working on you now. Let me get that.
No problem.
So do I need to make you the host, Eric, or?
You can do that, or if you just click on share screen, it'll say allow multiple people to share their screen.
Oh, okay, okay. Let me go that way. I actually don't see that option.
Are you the host, or is Don the host?
Yeah, I'm the host.
Yeah, just make him the host, AJ.
Yeah, I'll just make you the host.
That'll work for me.
All right, gotcha.
Okay, I am the host now. There we go. All right, now I can share my screen. And so, like I said, we work with all kinds of different investments and vehicles. What I want to do is share with you a little bit about us. You know what? I think I want to start off today with we'll start off with a private reserve account and talk a little bit about this, guys. This is a pretty incredible vehicle. Let me stop my, yeah, we'll do it this way. So what I want to do is share with you guys a little bit about the private reserve account, what this is and how unique it is. Now, it's an incredible tool. Oh, hang on, I still got my bar in there for some reason. Let's make it full screen and see if that bar goes away. Okay, let's see if I can make this hide. Lock the taskbar, hide the taskbar. There we go. Never mind. We don't need that now no more. There we go. All right. So what we want to do is share a little bit with you guys about the private reserve account, kind of how it works. This right here is what we talk about becoming your own bank. Because when you think about this right now, you guys put your money in the bank. How much does the bank pay you for that? Nothing, right? The bank doesn't pay you anything. But when you think about it, what does the bank do with your money once you've given it to them?
Then they loan it out to other people.
Loan it out.
Yeah, that's right. They take our money and they give it away, right? They take the money out of our bank account and they give it away. But what's crazy is they give away all of our money on credit cards at 29%, borrow it from us at nothing. And yet somehow when we go check our bank account balance, even though we gave away that money still says it's in our account somehow. Wouldn't it be nice if we could do that, use our money and have it continue to make money for us? That's the power of the private reserve account. We're going to show you how we can take that advantage and become our own banks and do what the banks and the wealthy have been doing for a very, very long time. So what we're going to start off with is a 2-minute video. And in this 2-minute video, what it's going to do is it's going to talk about becoming your own bank. And if you could build your own bank, what are the benefits you'd give yourself? So I'd encourage you, if you got a pen or paper handy, take a couple of notes. And I'd like for you to think about at the end of this video, it's 2 minutes long. Now, what are my favorite things? What are the things that I'd never heard of before? What are the things that I want most for myself? And we'll get a chance to talk a little bit more about those. So we're going to go ahead and start right here. And I'd love for any of you guys who want to share with me some of your favorites at the end of this to share. So here we go.
Old, broke, well, that's not good. Seriously, though, this is where millions and millions of people are headed if something doesn't change now. And that's why at CalChoice Financial, we created the private reserve account, the simple way for mainstream Americans to secure their retirement, protect their loved ones, and fund their dreams along the way. Here's how it works. Imagine creating your own banking alternative, and not just some ordinary bank, but the ultimate bank. Think about that for a minute. If it's your bank, what benefits would you give yourself? It would be a bank where your savings account actually grows by being linked to stock market gains, so you can benefit from those big rallies. And as your money grows, the gains are locked in, so no more of those scary drops. That's a win-win. You'd be able to access the growing value of your account anytime you want for any reason you have. No taxes, no qualifications, no questions asked. After all, it's your money. Oh, did we mention no taxes? And since it is your bank, you'd be earning the interest on the money you borrow from yourself while you pay yourself back. What? Let's keep going. You would have no early withdrawal penalties, unlimited contributions, and a college planning fund with no restrictions. When properly structured, your bank could pay off your mortgage in half the time, could provide living benefits for critical and terminal illness. And if something ever happened to you, your ultimate bank would be transferable to your heirs tax-free. Seems impossible, right? Nope. You just didn't know that the wealthy have been doing this for years. Now you're wondering, so why doesn't everyone open a private reserve account? Exactly. The real question is, why don't you? Contact your CalChoice financial representative today to set up your private reserve account and help put a stop to America's retirement crisis. CalChoice Financial, we're with you all the way.
Right, so this is a really cool little video that shares a lot about some really unique ideas. Anybody have something that really stood out to them that they really like, they want to share? All right, I know we got a number of veterans on here who some of the stuff they like, some of the highlights people typically like are the making money, never losing it, access to your money. Go ahead. What else do you have?
Man, I love the zero loss, because during this pandemic, I lost a lot of money with my TSP. And I love the fact that with my PRAs, I didn't lose a dime.
For sure. Yeah, that protection is one of the big ones people really like. They're like concerned about stock market. Like they like it, but they don't like it. And so absolutely that one. Tax-free is another big one. Access to your money, earning interest on the money you borrow from yourself, leaving it behind tax-free. And we'll get a little bit more into how all that kind of works. But where we really want to start off with and go is first talk about, what is the way that most people are trained to save? Most of us are taught from a very, very young age that we should be saving money in the bank. The bank is a safe place to save money, but we've already identified you put your money in the bank and they pay you next to nothing for that right now. If you're with one of the big three, the Wells Fargo, Bank of America, or Chase, they're paying you 0.01. That means if you give them $100,000 for this year, they're going to give you $100 of interest. Wait, I take that back. 1% would be 1,000. Yes, they're going to give you $100. No, they're going to give you $10. They're going to give you $10 of interest for $100,000 of money you left in their bank. 0.01% interest. That is what they're paying you, and then they're going to turn around and take that $100,000 and lend it out multiple times and make thousands and thousands of dollars on it. And that's the agreement we make with the bank, right? They loan that money out. Then if you want to borrow some of that money that you're giving them to lend out to other people, you got to qualify just to borrow it. You got to jump through their hoops. They set the loan terms, pay them interest, and ultimately that dollar does one thing for you. It buys you a car or a house or whatever you buy on that credit card at Amazon, right? This right here is where the banks use our money to make money for the banks. And that's where when most people are educated, this is what's safe. This is what we're taught to be able to do. It's either here or under our mattress, right? And that's why we want to show about the private reserve account. It's a little bit different. First thing is we want to actually be able to earn interest on our money. So we love the stock market because everybody likes it when the stock market's up. So we link it to the stock market because we like the ups. But nobody likes those downs. So since this is a bank, it's got to be guaranteed to never lose money. Did you even know that was possible, that there were places you could put money where it could make money when the market's up, but yet be guaranteed to never lose money? when the market's down. Most people aren't aware that anything like this exists, but it's been around for over 25 years now. Right? These types of programs, knowledge, and everything have been around, but they're not offered by some of the biggest places you're going to hear about. Fidelity, Charles Schwab, Prudential, Merrill Lynch, Morgan Stanley. They don't even offer these types of programs. That's where we show people how to be able to add these types of programs as part of their portfolio. No qualifying to borrow this money. It's your own money. You can access it whenever you want, but not only can you access it, even after you access it, you can continue to earn interest on it even after you use it, whether it's to buy a car or to buy an investment. You set the loan terms, deciding if or when you want to pay yourself back. It's tax-free at any age, and you can use $1 to serve multiple purposes, meaning that this can now be an emergency fund, a retirement account, or a lending alternative, and a number of other things. A lot of people go, you know what? This sounds too good to be true. How could this possibly be possible? The truth is, it's not too good to be true. It's just it's never been shared with you, right? This has been shared with a lot of people, but like you mentioned, with people with a lot of net worth have the high-powered CPAs, attorneys, and advisors who are fighting to bring them this type of information. And all you have to know that the wealthy are getting different treatment than you is to take a look at your local bank. Because if any of you have ever put a large sum of money into your bank, even just for a couple of days, the kind of treatment you got at your bank for the few moments you had that money in your bank account was very different than the treatment you get the rest of the time. The banks have entire teams of people made to serve you based on how much money you have. The more money the bank knows you have, the better services they give you. If you got no money, they're giving you a 1-800 number and it won't do anything for you. If you've got piles of money, they will trip over backwards just to be able to help you because they know that there's a lot of money then for them to make. That's what we really want to teach you about, these types of tools and services. Now, also, these types of programs, they are governed by specific laws. They aren't just, I gotta let people in. Yes, I can totally admit people. Let me see if anybody else is waiting over in our participants. Let's see here. Looks like participants 9. Everybody should be in. I'll keep watching to make sure that if anybody else comes in, I'll keep looking for that. Thanks. Keep me on that. All right. So again, what we want to be able to do is share with these. And these types of programs, they're not magical. They're not mystical. They are governed by very specific laws. And specifically when it comes to one of the most important ones, the fact that it's tax-free. There's this very important entity called the IRS that we have to keep happy. I'm not going to dive super deep into all the specifics of how that works in here. We can dive in super deep at a later point for those of you guys who are pretty interested in it. But let you guys know that the idea here is the fact that we follow some very specific IRS guidelines. And when we follow those IRS guidelines, there are some rules and limitations on how we do it, but it's very, very flexible. When we follow those guidelines, we're able to do all of the following things. We're able to grow our money tax deferred, make money when the market's up, never lose it when it's down, access that money, unlimited amount going into it, tax-free withdrawals out, retirement accounts, no early withdrawal penalties. So you want to access that money at 32, no questions asked. You want to leave that money later, no questions asked. There's no limits on how early you have to start pulling money like you do in an IRA. Loan and lending alternative also covers long-term care, college planning, pay off your home more quickly. It's liquid and available if you need that money. And you can even earn interest on that borrowed money. So those are some of the benefits we have here. And then, of course, it also passes on to the next generation entirely tax-free. That's one of the biggest advantages the wealthy understand is passing that money generationally without Uncle Sam getting involved in the middle of it is how you create a dynasty, an empire, as opposed to merely creating something for yourself. By being able to pass that money generationally is a huge, huge thing. So what we want to talk about is one of the big things that most people get lost on, and they go, wait a second, this doesn't sound like anything I've ever heard before. How does that all work? Well, what we want to take a look at is how most people invest money, because this idea of not losing money just sounds crazy. So the first thing we talk about is how do most people make money? The way most of us are trained to make money is what the guys on the TV, radio, and news talk about. That should you want to invest, you simply put a bunch of money in the stock market, and over time, it's going to get this great average rate of return. It's going to average 6, 8, 10, 12% or whatever it is. And ultimately, you're going to make this big pile of money. The problem is all these guys on the TV and radio always focus on averages. And averages are not real. Let me explain what I mean. The way you find an average is really, really simple. You take all of the numbers and you simply add them up. So do the math with me. Minus 50 plus 50 is 0. Plus 50 minus 30, that's 20. To get the average, you simply divide by 4. 20 divided by 4 is 5%. So if you take that 100 grand in the middle of the screen there, and you get 5% a year for 4 years, you're going to make a little bit over 5 grand, and you're going to have about $221,000 after 4 years. This math makes sense. I mean, we can do this math. We can get out our calculators. This will work every single time we do it. The problem is this math is not real. Let me explain what happens when you do the math a little more slowly. You take that same 100 grand and you lose 50%, you got 50 grand left. Now, when you make 50% back, you're doing it on half as much money. Half of 50 is only 25. So let's stop right there. You started with 100 grand, you ended with 75. Does that look like a 0% to anybody, or is that a loss?
It's a loss.
Right? We lost money, but we just agreed minus 50 plus 50 is equal to 0. Do the average. Minus 50 plus 50 is 0. You average 0%, and somehow you're down 25 grand. You keep that going, you end up with $21,000 less than you started with, not $21,000 more, and some dude in a suit's going to tell you average 5%. Do we have a problem?
They done got about 10 rebounds.
Yeah, right. This is a problem that we deal with, that, these averages don't actually tell us what the real story is. Now, these are some made-up numbers. A lot of people, well, that sounds like a great story, but that, over time, the numbers all add up and average out. Let me show you some numbers that you might be familiar with. This is something called the S&P 500. For those of you who aren't familiar with it, this is the one you hear on the TV and radio all the time. It's probably the best indicator of our strength of our economy in our country. 500 largest publicly traded companies in the U.S. This is what's called the lost decade. It goes from 2000 to 2010. Those of you guys who don't remember, in 2000, that was the dot-com bubble burst, 9/11 and Enron, followed by a few years of recovery, followed by the 2008 market crash, followed by a couple more years of recovery. This is a decade, 11 years. Take a look at the average of those 11 years. That average is almost nothing, 1.95%. Does not even keep up with inflation. That means if you had a...
I seen that.
That's exactly where we're at. Yeah, love the energy. So here's the thing: we've got this all here. You got $500,000 sitting in the bank, averaging 1.95% a year. You end up with 618 grand after 11 years. But the worst part is,
we got a what?
Hello? Who's talking there?
Hey guys, mute out your phone, please.
All right, perfect.
Yeah.
So what we got here, got the 618 grand, but you aren't even keeping up with inflation at 1.95%. Worse off, though, most people put their money in the stock market. So they're that red line, right? That red line says that you lost money, you made it back, you lost money, you made it back. After 11 years, you didn't even have what you didn't have 618, you had 520. Just $20,000 more than you started with, not $118,000 more. And yet that red line and that green line have the exact same average. This is the problem with those guys on the TV and radio saying, hey, you're going to get this great pile of money if you just average 12%. Well, you can get that average and end up with way less money than they're sharing with you, unless you can find a way to get a guaranteed 12% every single year with no fluctuation, which just simply does not happen. And that's where this comes in so important, and why we take a look at, what if we were able to do something better? I'm sure we'd all agree it would simply be better if we could make money whenever the market was up, and we never lost any money when the market was down. That would, of course, be better. Unfortunately, that's actually too good to be true. So what if instead we could only make some of the upside? We make some of the money when the market's up, but we didn't have to lose any of the money when the market's down. So let's say the most we could make when the market was up is 12. So there in 2003, we don't get to make 27. We don't even make half that. We only get 12. 2006, we don't get 15. We only get 12. But no, wait, we don't lose anything. We just don't go backwards. We have more or less money than that green line. The answer is more, and not just a little bit more, but a lot more.
Yeah.
Right? Why? It's not just 520 or 618. We have $941,000 over the same period of time, because we don't have to spend any time making back money we used to have. Right? This is what we talk about. Investing should be about making new dollars, not about making back old dollars. And this is how we're able to make that money going forward. So that's really what we want to be able to show people. This is how we make money inside the private reserve account. Now, I'm not going to embarrass us all and ask you which one of these lines you want. It's obvious. We all want more. But it's now time for a pop quiz, and I want somebody to participate here with me, somebody who, hasn't seen this before. That pop quiz is this. Everybody loves to make money, but what is one thing people like to do more with their money than make it? Any guesses?
Not
Spend it.
Spend it. Spending money is what we like to do, right? We like to spend our money. That's the whole reason we go to work, so we can spend it. So let's talk about spending this money. So one of the ways most people spend money is we go out and we buy cars. And the way most people buy cars is they go out and they get a car loan. So with a car loan, what they typically do is they go out and they borrow $25,000. They end up paying $471 a month for 60 months. They pay $3,000 in interest. So they pay $28,000 for a $25,000 car that at the end of 5 years is worth nowhere near 25 grand. And once most people pay off their car, what do they do next? They go get another one. Like, man, that's fantastic. I need another loan. And they keep doing this cycle over and over. Now, a better way to buy a car is to simply pay cash for it. Now, unfortunately, you got to save up that money. And once that money's saved in the bank's using it. And then you buy that car, and after 5 years, you paid 25 grand for it, but it's still not worth 25 grand. And your bank account's empty because you spent the money. It's a little bit better than paying 28 grand, but not that much better. Now, what if there was a way where you could have that money in your account, take it out, go buy that car with it, and have your money keep making you money? That'd be interesting? Of course it would be. That's where the private reserve account comes in. The way the private reserve account works is that you do have to save up the money first. You have to have that money in your account. But once you get that money saved up in your account, now remember, it's making money when the market's up, never losing it when it's down. In this example, you can make 14% of the upside and take none of the downside. So when you're doing that, you're able to borrow that, you earn at 14, you're able to access that money as well. Now that you got the 25 grand saved up in there, you could just withdraw it, take it out, and be done with it. It wouldn't make you any more money. But instead, these companies, backed actually sometimes by some of the largest insurance companies in the world to guarantee it never loses money, they'll allow you to borrow the money from yourself. They'll say, look, we'll hold your money as collateral and lend you our money, but we guarantee to give you the loan. No need for credit check, nothing else. You could have declared bankruptcy yesterday. And as long as you got the cash, they'll give you the loan because you have the money. Second thing they guarantee is that they'll never charge you more than 5%. Why is that so important? Because that means that they can loan you the money at 5%, but they actually leave your money in that account where it makes money when the market's up and never loses it when it's down. So you can earn 14 and only be charged 5. For those of you doing the math right now, you realize that means you could make 9% more than the money you're spending on that car. So you spend that money and you still walk away with 9%. That's awesome, right? The problem is the market's not up every year. So let's talk about the worst thing that can happen to you. For those of us who are pessimistic like myself, I'm like, all right, what's the catch? Show me the worst. The worst thing that can happen to you is you borrow that money, you are charged 5% interest, and you earn squat because the market went negative and you earn 0. That is the worst thing that can happen to you. In that case, you're in the same boat as everybody else with a small car note, paying a little bit of interest. However, most car loans are not 1 year. Most car loans are 5, 6, 7, even 8-year loans now. But let's pretend they're just 5-year loans. We took the worst 5 years in history, right there at the top of the screen, 2000 to 2004. 3 of those 5 years were negative and you earned 0. You were charged 5%. You only made money during the last 2. Now, we show you paying the same $471 a month back to yourself. You don't actually have to, but since you were going to pay the car company, we thought you should pay yourself back. First off, you save a little bit of interest. You save over about $1,000. But more importantly, while you're driving your car around, your money earns you $3,101 while you're driving your car around. Meaning that you saved a total of over $4 grand buying that car. Sounds like a better way to buy a car.
Absolutely.
But now this is the worst 5 years, right? I'm going to end on this, guys. I just want to show you what the best 5 years look like. But this doesn't have to be a car. You could be purchasing a rental property. You could be retiring and vacationing. You could be doing whatever it is you want. You could pay yourself back. You could not pay yourself back. It's your choice. It's your money. But this is a good 5 years. During a good 5 years, your money didn't earn $3,000. Your money earned $15,000 from 2010 to 2014. And one of those years was a negative. So this wasn't even a perfect 5-year period, right? This one of those years was a negative year. And so you still got $15,000 new dollars. Meaning if you did not pay yourself back, there'd be almost $15,000 new dollars in your account. And if you were smart enough to pay yourself back, you'd have the 25 you borrowed plus the 15, the $40,000 new dollars tax-free in your account that you could use on whatever you wanted. A better car, pay down your mortgage, put a kid through college, or go on a cruise, right? It's your money. You can access at any age and do what you want with. So this right here is the private reserve account, guys. Now, there are some downsides to the private reserve account, right? It's not a mystical, magical investment that's going to replace your bank account. There still is a little bit of a long-term investment. right? What we let people know is that it is not like you can put money in it this week and pull it out next week. It does take a couple of years to spool up. Most of the money you put in the first year is not liquid the first year, right? It takes years 2, 3, 4, and 5, more of it becomes liquid. But typically by year 3, 4, and 5, you have the majority of your money liquid and available you can borrow against, which is where most people are able to use it. But it does require proper planning, and it's only part of an overall plan. Because again, this is not the only thing we do. We take it all together. But this is an incredible tool that most nobody has ever heard of or even ever had it shown to them in this way, that they can use this in their portfolio when they understand the tax-free nature of it, that they can have hundreds of thousands of dollars coming out tax-free to them, where they don't have to report it, doesn't affect their Social Security, they can access it at any age, and they can even continue to earn interest on it. It changes the way people look at money and changes the way people use it. And that's what we're doing here at MWR, is we're changing our relationship with money, right? This is the first tool we have. So what I'm going to do is I'm going to take a quick pause here and just see if there's any major burning questions that we need to get answered before we move on to a second investment that I want to go through kind of quickly. What other questions? Anybody have any questions before I move on? All right, then what we're going to do is we're going to go ahead and jump over to our land banking side. Oh, was there a question?
Hey, y'all don't be afraid to ask questions. If you have any questions, man, please ask. This is the time to ask.
If not, you can bring it. If not, we can bring them at the end. If you can't think of them now and they come up later, I'll give another shot at the end of this. But let's go ahead, and I want to talk about a second type of investment, because again, the goal tonight is not to talk about the things you heard about, not to tell you about our cool diversified portfolio and how we're going to put you in this mutual and stock bond portfolio that's going to grow and blah, 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 blah. I mean, all the stuff you heard before. We're here to share with you something new that you haven't heard before, because the whole point of this is that MWR is teaching you things you did not know. If we were going to teach you the stuff you already knew, it wouldn't bring you any value. So we're going to talk to you about something that you do know about, but you didn't know how to do. And it's something that we call land banking. Why is this something so important to us? Because land banking is something that we believe that the wealthy, well, we know the wealthy have been doing for a long time, but that most white people are not allowed to talk about. And this right here is just a little bit about us. We are an Inc. 5000 company 2 years in a row. We share this with you not to brag, but to let you know we've been vetted. Out of over 18 million privately held companies in the country, 2 years in a row, we were in the fastest 5,000 fastest growing, right? This is the upper echelons of the 1% of, the fastest growing companies in the country. I mean, we had to go through our accounting, have our entire business practices vetted, and go through and monitored to know that we are a legitimate company doing great things. And the reason we're growing so rapidly is because so many people are sick and tired of being sick and tired. And that's really what we want to share with so many people. Let me see if I can, you guys all see my bar down here with all my little icons? You guys see that?
Yes. Yes, we do.
See if I want to see if I can make that go away. Let's see if I can make it go away. Let's see here. Maybe, maybe not. All right, well, we're just going to have to deal with it. So what is land banking, right? And who is CalChoice? So CalChoice, we are a land banking company that tries to bring the oldest, most time-tested wealth building tool to everyday families, right? To create wealth utilizing that oldest, safest, most secure form of prosperity. This is important. The financial industry does not want you to know about. Why won't they want you to know about it? Because they're not making money on it. When you call up Fidelity, do they sell you any real estate? When you talk to Charles Schwab and you say, hey, I'm thinking about buying some real estate, what do they tell you? You should instead invest in our mutual fund portfolio that's going to make you lots of money. It's far safer, less risky. You don't like tenants, trash, toilets. Real estate has lots of risk. Instead, put it in our stock market portfolio, which is just the same amount of risk, but we can at least sell it to you, right? That's the problem. They're actually salespeople, not financial advisors who are looking at all areas of investment. They're limited to what they're allowed to sell you. And that's where we don't do that. We work with all areas of investment, including encourage real estate. Why real estate? Because it adds true asset diversification. This idea that you don't put all your eggs in one basket. Well, if all your eggs are in the stock market, guess what? All your eggs are in one basket. Contrary to what your advisor says about you being diversified, you've got one big basket that's got, this year on the right side and the left side of the basket, but they're all in the one basket. And it builds you equity day one. One of the things we do is we're getting real estate below market. If you could buy your neighbor's house for 20 to 40% below market today, would you want to do that? That's what we're doing. We're helping you buy real estate 20 to 40% below market And it's what the millionaires have been doing for a very, very long period of time. So what land banking is, it's buying land, selected land in the path of growth, waiting 7 to 10 years and selling it to developers for a significant profit. This is what we're trying to do, is buying that in that right area. And we're able to help people do that who have as little as $40,000 in an IRA or 401k. Many people didn't realize that they could own real estate using their IRAs and 401ks, and that's because their advisors have never let them know that's even an option. So what we're going to do is share with you guys how that can become a possibility. People with cash also works great as well. Where do we do this? In this little circle, the 60-mile radius of this little city called Los Angeles. You might have heard of it before. A lot of people often go, well, what other areas are you doing it? Are you doing it in North Carolina, Georgia, Florida, Texas, Arizona, Utah, Montana? Where else are you doing this? And right now, we're only doing it in this one area, and it's because of very critical research. This slide is my favorite slide. Everything I show you after this is icing on the cake, but this is the cake. The key driver of all economics is supply and demand. What you want in order for something to become valuable is you want a very, very high demand and a very, very limited supply. The higher the demand, the lower the supply, the higher the price then goes. That's what makes California real estate so incredibly valuable. There are more people living in that circle, which is only a 60-mile circle, with 1/3 of it over water. It is the 15th largest economy in the world, second in the U.S. There's 19.5 million people currently living in that area, and the U.S. Census Bureau, Labor Bureau of Statistics, is expecting another 1.9 million net move-ins. That includes the people moving out of California. They're expecting 1.9 million net move-ins in the next 10 years. And then again, right back here at the very bottom, there are more people living in that circle than Oregon, Nevada, Arizona, Idaho, Utah, Montana, Wyoming, New Mexico combined. So we have limited, very limited, first off, we have a massive population. This is a huge demand. And then the supply, for any of you who've ever been to California, it's built out to the oceans and to the mountains. There's no room left within a commutable distance of the heart of LA, except for one area. You take a look at Texas, we take a look at a few other places, and the question is, well, which way are we going to expand? Texas is growing and expanding rapidly. But if you've ever driven through Texas, you know they have a lot of land, right? It seems like half a road trip goes through Texas. But here, they don't have that availability of land, and we know the exact direction it's going to go because it's the only area left for it, which makes it predictable, right? Currently, there's a 12-lane superhighway that goes right over those mountains now that didn't used to be there, that we have 100,000 people a day commute back and forth on, both directions. 72,000 people coming from the Antelope Valley to LA, 25,000 people commuting daily from Los Angeles up to the Antelope Valley for aerospace jobs, which we're going to talk about later. This demand is what allows people to move out here. The other piece is low-cost, affordable housing. When you think about the reason people tend to move to the outskirts of your community, it's because you can buy more house on the outskirts for less dollars, right? You can get a bigger house, more lot, more everything else out on the outskirts than you're going to get in the middle of town. In the middle of this Los Angeles area, the median home price for a very mediocre home is $600,000 to $700,000. Up here in the Antelope Valley, we're talking about the 300,000s is where those median home prices go. It allows you for a very affordable rate to be able to buy a nice home, but still be in a commuting distance of your work. Now, these are the types of properties we're buying. This right here shows you a sample of one of these parcels right here in the middle of one of our parcels, right? You can see that this is not in the middle of nowhere. This is right on the edge of the community. As a matter of fact, take a look at all the things around it. We've got Lowe's and universities and hospitals and all these other things. I want to point out a couple to you. This first one is Kaiser Permanente. They're a massive hospital group and health insurance company. And they've moved their world headquarters here, employing thousands and thousands of people. And they've built this $250 million building here with all green energy, solar glass on the top, windmills behind it. And they're building a 17-acre complex right behind that. I want to go back here real quick. Take a look where that circle is. Do you see that giant dirt square just north of it? That entire square is already being constructed right now to build a 17-acre health complex where they're going to be building cancer research, brain surgery, heart surgeons, every type of specialty group out there in this massive 17-acre medical complex that's going to be bringing thousands of jobs, everyone from literal brain surgeons to janitorial staff, creating jobs, which creates more demand for more people coming into the area. Second one here is I want to show you this. Look at the second circle right there on the bottom. That's the Antelope Valley Courthouse. Now, any of you guys who know bureaucracy, California's got more bureaucracy than anybody else. It takes 10 years of planning and everything else to get one of these buildings built. This is a $200 million courthouse designed to service this whole area. This is not just something they plop down. When you think about the courthouse in your city, think about what's around the courthouse. Big banks, fire stations, police stations, other city buildings, architects, planning, construction offices, attorneys, restaurants to serve that area, libraries, and other municipal and other corporate infrastructure that all goes around the heart of a city. Take a look what's around that. Look at all that dirt. We buy property around the Antelope Valley Courthouse as often as we can because it is going to be the center of this area. So we keep going through this and helping to be able to understand that the city does just not randomly place this here. We also track Walmarts. Walmart, love them or hate them, they're a very successful business. And when you go look on their website, the average Walmart is designed to handle 250,000 residents. Walmart has a high volume, low profit business where what they're trying to do is they have to have a lot of people buying a lot of stuff for them to be able to survive. So they don't move into areas that don't have the population to support their stores. And they are such a large entity. They are the 19th largest economy in the world by themselves. If they were a country, they'd be the 19th largest. They have the money to do the research. They track population growth and density, and they have projection models to know where that growth is going to occur. In this area, they already have 6 Walmarts, which means they anticipate the growth to be 1.5 million people living in this area. Today, there's just over 600,000 people living in this area. So the Walmart is also predicting massive growth in this area. And take a look at other retailers you recognize. Target, PetSmart, Ross, Petco, all these other companies have done lots of research also to support that the population and the economy is there and growing. Keeping going, Warren Buffett, the Oracle of Omaha, is one of the most intelligent investors in the world. He's got multiple billion-dollar investments out here. One of them is he's got a solar farm, the world's largest solar farm actually, that he's fully built and constructed, creating thousands of jobs, and it's designed to power over 1 million homes. And there's not 1 million homes in the valley yet. And he actually wants to do more in this area. He has a number of other investments in transportation. One of those is an ownership in a company called BYD, Build Your Dreams. It's an all-electric bus manufacturing company that has had 4 different grand openings because they keep getting more and more orders and they have such demand that they have to keep growing out their manufacturing facilities. And their headquarters right here in Palmdale. This back here, again, back to the healthcare, which is a big thing, but also green energy is huge in this area. California has a mandate that over 50% of their electrical power must come from renewable sources by 2030. They're ahead of schedule on all of those things, and this is part of it. Every single building produces some of its own power, and I as well do all these things. Transportation is another huge thing. Right here, accessibility to an area allows more people to commute into the area. Right now, they've got a number of different things, but the big one I want to draw your attention to here is the airport. This airport used to be controlled by the Air Force. It's been given back to LA County and is now being getting commuter flights. They've been approved over 400 daily commuter flights for it. They're building a new multi-million-dollar terminal and control tower to allow more and more daily flights to come in here. Right now, they're actually growing this, and there's in discussions of having this alleviate a lot of the traffic going to LAX and making this an international airport. But this is another one, the high-speed rail. This is one that a lot of people have been going, oh, is that really going to happen? Well, it's happening. It's under construction now. That thing you see there, a big purple thing, that's called the Arctic. That was $180 million to build and is the final resting stop of the high-speed rail. It's fully constructed, sitting there waiting just a couple miles away from the happiest place on earth, Disneyland. As well as there's the governor signing the first rail. That was several years old. That track is under construction, has currently been being constructed for several years. Here's yet another one, though, a second high-speed rail. This one goes from Los Angeles to Las Vegas, right? Any of you guys who know that what that road looks like there, it's a little 2-lane freeway, considered one of the most dangerous highways in America because of the poor construction and the poor maintenance on the highway. They're building not only a new highway, but they're putting this high-speed rail right up the middle, which will allow people to commute from LA to Vegas in an hour. Now, love Trump or hate Trump, but he's got some interest in Vegas. This train has been being planned for over 10 years. As a matter of fact, it was originally going to be paid for and was being paid for by the Chinese. But Trump came into office and said, this needs to be built in America. And up stepped a couple of people, Brightline out of Florida, as well as Richard Branson of Virgin Trains, Virgin Galactic, Virgin Airlines, Virgin Mobile. He's building out all this stuff as well. And they're actually under construction on the freeway this year. This has already been done. Construction has begun. The first 185 miles of this track has begun being laid. Again, jobs. Aerospace is the biggest employer out in the area. Northrop Grumman, they've got a new contract to build 100 long-range stealth bombers, creating 6,000 new high-paying engineering jobs. Aerospace is actually the largest employer in this area. You got Skunk Works, Raytheon, Boeing, because again, this is the area that the Air Force used to be using for all of their stealth and bomber projects. So all the contractors are out there, and they're creating new and more jobs. This just, again, talks about all the growth, the aerospace hub in the area, all the opportunity, transportation, businesses, and residential building. Another thing coming to the area, the Olympics in 2028. There's a lot of money pouring into revamping all of the public transportation to allow all the visitors who are coming back to LA for this to be there. Showing you here just this, in 2017, they generated over $874 million for these projects to build all these new tram lines. Because you think about it, all over Europe, you don't even need a car for many areas. You're able to get on a subway, a high-speed rail, travel around. Even in New York, everyone takes the rail. They're trying to alleviate a lot of that traffic by creating a better public transportation system. This is the new freeway that high-speed rail is going up, the first freeway in over 15 years, going right through the heart of Lancaster and Palmdale, which again creates more access, which creates more reason for more people to move here. This talks about those homes that have solar panel roofs and water recirculation systems for the things. Well, I want to talk to you guys, this is probably where we're going to end tonight, is what's in it for me? What does this actually mean? So this is a third-party study of all properties in the area, not just ours, over 17 years. It ended in 2012, so we saw the best of the best, and we saw the worst of the worst, right? Over 9,000 properties in over 17 years, and here's what we saw. The average property appreciation rate was 24% per year, and the average hold time was 3.7. Now, I'm going to stop you right here. We say double-digit returns. How terrible would it be if you only did 10%? Now, we've seen returns like this all the time, but we said, what if it's only double-digit? What if it's 10, 12? How terrible would that be? And it says 3.7 years. We distinctly tell you that if you do not have 7 to 10 years, you do not belong in dirt, because dirt is not liquid, right? This is not something that you can, take a shovelful, go down to Walmart or the electric company and pay your bill with. So this is something that you need to anticipate a 7 to 10 year hold time on. Even though it might sell more quickly, we have to make sure that you have a 7 to 10 year hold time, and that it's not your entire portfolio, that you have adequate liquid reserves and other investments outside of this as well. But again, this shows an incredible way for people to catch up and or get ahead on their financial investments. So who is this right for? People are looking for an investment they can understand, recovering from something that maybe they didn't understand, like the stock market or coronavirus. They want to get that equity day one, wanting to leave a legacy, or just an investment that they get, right? They've always wanted to participate in real estate, never known how to do it or how they could, and now they found out that they can do it with money they already had without even having to write a check, because they've got money in IRAs and 401ks that is available and sitting aside for this. Now, again, guys, this is just part of an overall plan, but we find that these are some parts of a plan that most advisors aren't even allowed to talk about, and those who are allowed to talk about it don't really understand very well, or it's not very simple. We've tried to bring some complex things and make it simple so that every single person can have what the wealthy have in their portfolios. The wealthy, they all own real estate. So why don't you? Why is your advisor not talking to you about it? Why has he tried to talk you out of it? And the answer is because it's not in his best interest, right? We want to make sure we do what's in your best interest and give you the best education, the best opportunities available. So that's really who we are and what it is that we're doing. What questions do you guys have about any of this before I turn this back over to AJ and Don?
Questions. All right, either y'all shy or he did a fantastic job of explaining.
For real. Granted, he did do a fantastic job, but I'm sure y'all have some questions, man. This is remember, this is an opportunity that, is not widely talked about. So if you have questions, please ask. Somebody else may be thinking the same thing. I'm
making you back to host, AJ.
All right. Hey, Eric, we do, man. Every time, man, we talk, man. It is a truly a privilege. You know, you've done so much for me and my family, man. I always appreciate listening to you talk about this stuff. It's so interesting, and it seems to be so new. And one thing I didn't think about, though, Eric, is that the Los Angeles Raiders moved to Las Vegas, right?
They did.
So,
but now they can still travel.
So now their fans can travel an hour on the rail to get to the games. They're smart. There's
a lot of things going on in the area. I mean, you know, there's a lot of smart business people there.
Yeah, absolutely. Hey, man, we greatly appreciate it.